Have you ever wondered how to trade on a day where market structure is confusing, or let's call it mixed, where you have reasons that it could be bullish based on market structure and it could also be bearish on market structure depending on the time frame that you read? In these situations, when you are not within a higher time frame point of interest, it can be quite confusing on how to trade that session. So in this video, I'm going to go through a trade that I was actually live trading, live streaming with my members, something that I do very often, but you'll also see my exact execution, my thought process as I was doing it live. And in this case study, I'm going to go through step by step on each candle, going through each thought that I have whilst I was trading live, and exactly how I navigated a day where market structure was a little bit confusing, and how I relied on my trinity to overcome the confusion of market structure, being time of day, inducements, and lower time frame confirmations. This trinity that not only helped me make $8,000 on this day, but actually over the last year of the public signals that I've been doing, the live documentation of the trades I've given, calling the entry and stop loss before the trade plays out. And in these public signals, you would have noticed the 60% gain that I've had across more than 70 trades that I've called out live. Every single one of those trades is factoring in this trinity. So not only am I showing you complete transparency of trading over time with a 1-year documentation of live callouts which cannot be faked. Additionally, you're seeing an insight, a sneak peek behind the curtain, going through that Zoom recording where you're seeing my step-by-step thought process live in real time as I'm taking the trade myself. And then you're additionally seeing my own position, the exact dollar amount that I made, directly seen from my MT4 brokerage. So the goal of the channel for me to bring you education and ideas and concepts that have worked for me in my decade of trading. I'm also bringing absolute transparency from live callouts and documentation to live streaming the trade to a full case study and proof that I actually took the trade. And the reason I want to take that level of transparency is so you know you can trust the information that I'm giving you, because this is exactly how I trade, exactly how I've made millions of dollars from the market in my lifetime, and the combination and culmination of almost a decade of experience in the markets, so that you can just drag and drop this information and not have to go through the trials and tribulations and the years and years of sacrifice and the blown accounts and all the things I had to endure. Rather, you can just learn from these lessons, apply it directly into your trading, and achieve your trading goals a lot faster and a lot easier. So let's jump right into the case study. So let me build out the problem you probably often encounter in your trading, because market structure can only get you so far. So consider this: we have a bearish market like so, and in this bearish market you can see from this point to the lower low that is being made, not only because you made a break of structure and therefore a new lower low, so you have a swing high to a swing low, that's very obvious, but also internally when you read the price action within this leg, you can actually see the sellers are actually truly in control. How do we know that? Because not only does price go bearish like so, because that's very clear price action, what gives it more confirmation is when price is doing something like this. You get an inducement up and price goes lower. You have consolidation, build up of liquidity, inducement to sweep that liquidity, and then a new lower low. And then price continues to do something the same, where it might even sweep low, sweep high, sweep a minor inducement of local highs like that, go into a regional supply, and then continue lower. So when you have these kind of things in place, you can actually mark out not only market structure where you have lower highs and lower lows and lower highs and lower lows, you can actually identify the inducements, and these inducements are senses of control. Now these are areas that price is truly magnetized towards, because the institutions took control here because they swept liquidity. So when you see price action like this within your bearish markets, you have certain areas that you can focus on, because you know that's where the sellers took control based on these inducements. So that's the first portion, where you have the bearish leg and you identify the internal trends, you identify that internal structure, and you really understand it to a high level because you identify the inducements, those true zones that price is magnetized towards. Then you start to have multiple levels within your bearish trend, where you have not only the extreme, where you know price is going to trend all the way to that extreme potentially, like so, before making a new lower low. That's one scenario. But then you also have other scenarios within here based on your inducements, where you have other zones price could react off. And therefore, you know that price could come here, bounce, or price could come here, bounce, give a small reaction, continue higher, bounce over here, give a small reaction, maybe make a lower low, doesn't have to make a lower low, it could come into that area, bounce, and then continue higher to that extreme, and then maybe give the lower low from here. So you can actually get profitable trades from here and from here, even though it didn't make the lower low, and actually make a whole swing trade from the extreme maybe, but you know that these are high probability reaction points because they had an inducement within it. So you know that if you align it with the session volatility, lower time frame confirmations, and the inducements, you have found that trinity on high probability levels are definitely worthwhile for intra-session trading, especially if you are trading in the way that I do, where you are focusing on M1 movements. You are truly understanding the session. It doesn't matter what the weekly time frame, the daily time frame is doing, because we're focused on a London Open, that first 1 or 2 hours of London. And if you can catch a trade and trade that average session volatility, you can be in and out in the space of an hour or two and catch a 1 to 3 risk reward trade. And that's the power of intra-session trading. Now, this stuff is probably fairly simple to understand, fairly obvious, but this is the problems that can arise. So now that we can see the bearish markets, we have our preferred areas based on inducements and based on decisionals and extremes. Then we need to understand the trend, and that trend can be confusing because we know overall it's bearish, we can see that, but then when internal trends start to build, for example here, it's still bearish, but when this area that should make a lower low in a bearish trend fails to make a lower low, rather goes on to make an internal higher high, like so. We have high, fails to make a low, makes an internal higher high. We've now established a new higher low to higher high movement, so therefore we know we can start to have bullish price action until one of these supply areas, this portion known as the complex pullback, internal bullish price action within a bearish trend to go on to make a new lower low. So that complex pullback is internal bullish price action to allow price to come higher towards one of these supply zones. So then you have two trends. You have overall bearish market structure, and then you have bullish internal market structure. So now you're layering price action. And again, this can be a great guide, but where it gets really confusing is when you have inducements here and you arrive to your inducement supply zones. Then you're in mixed territory, because if price is sitting here in no man's land, do you follow the inducement supply and maybe lower time frame confirmation here, or do you follow this internal trend that is bullish and therefore you should go on to make a higher high? That's where things get complicated. And in hindsight, it's very easy, but the reality is there are roadmaps in price action, and these are specifically called inflection points, where in price action you have price at a certain level and you have two equally probable outcomes where it could be bullish or bearish from here, and that point specifically where it overlaps is called an inflection point. So these inflection points in the market are where you have to be really careful, because you can see in this scenario, if price did something like this, it went from previous demand area that made an internal higher high, came into that area, made a higher low, went on to make a new higher high. If that happened, that would make complete sense and you would understand it, because this complex pullback is happening and we're maybe trading towards hit level 2 or level 3. So if that happens, you could take the buys and it makes sense, and in backtesting it makes sense. But at the same time, you have the other option, which is price goes from here and then does something like this, and you have a bearish reaction. When you see that happening, you see price goes on to make that lower low, you understand it and you say, yeah, it makes sense. We had an inducement supply in a higher time frame bearish market. We had a tap into that supply zone, and then we had internal bearish price action and internal mitigation going on to make that new lower low. That would make complete sense also in backtesting, and when it plays out in hindsight, you would understand it and it would be very easy to see why that happened. But this is where traders go wrong. They fail to see that this area right here is an inflection point, because from that same area you had a bullish outcome and a bearish outcome, and you have to understand the differences on knowing which side of the market to be on and not getting trapped. How do you do that? You understand lower time frame confirmations, you understand inducements, and you understand time windows. The Trinity, as always, will always guide you. And that's exactly the situation we had in this case study. So this is something very important to explore, because market structure is helpful, but it's not enough. And you need to understand these things, whether you're a trend line trader, whether you're a Fibonacci trader, whatever strategy you have, you add the Trinity, your strategy will be better. So arriving into the day of the trade, let's start off with the 1 hour time frame, and I'll walk you through exactly my thought process, exactly the trade I took, and you can also see the live screen recording. In fact, if you check somewhere in the description below, you'll actually have access to the full screen recording of the full live session that my members have paid thousands of dollars to access my live streams. Here I'm going to give it to you as a gift, where you can see my live thought process, everything that I did as I was taking the trade, a sneak peek behind the curtain, and an extra resource for you to go through over an hour of recording of mine, how I live trade and exactly took this trade. So getting into the 1 hour time frame, there's a few things to consider, but it is very clear from a market structure perspective that we have not only an inducement over here that led to a push lower, then we have an inducement over here that led to a push lower. We knew that the sellers were in control, not only based on inducements, but also market structure. So when we see prices now taken out this level over here, this level of supply that had an inducement, equal highs, run of liquidity, new lower low. Who loves these areas? Smart money traders. So when we see that price is giving them that reaction and then taking them out, that is another form of inducement. So we can actually call this area a smart money trap. And then when price arrives to the other inducement candle and then gives a reaction, this is where I see that the sellers actually take control, because we see not only price reacting from it, it's actually making a bearish market, specifically this portion. This bearish leg confirms to me the sellers are in control after this smart money trap inducement and after mitigating supply in a bearish market. So overall, the context is supply zone met, an inducement supply zone, inducement liquidity off this level, and then the sellers taking control based on that sellers push over here, taking out all of these structure points. So we know that the sellers are clearly in control on the higher time frame. Now, coming into the M15 time frame, where we could start to see intraday price action. We could start to see levels of control. Now, that same push that I mentioned that shows me the sellers are in control, that bearish market structure, let's read it a little bit more in detail. So we can see that not only do we have a build up over here, inducement over here that led to a push out, fails to make a higher high. When we see that fails to make a higher high, respects that previous supply point, mitigation of the higher time frame zone, and then gives a bearish push, what is this telling us? The sellers are starting to take control. And then this buyer zone, this area of demand, this area that's a sweep for smart money, what happens on that level? Price comes in, does a build up, does another sweep, and actually gives that reaction. Now, we are seeing it that it's efficiency of the pullback coming to supply, but we are going to be seeing that smart money traders are going to be loading up buys on this demand area like so, because we see that it's a sweep zone that led to a strong push out. They're also going to be loading up on this area because there's an equal lows run of liquidity, another sweep for smart money traders. They're going to be entering here. Both of these zones end up being smart money traps, and this one ends up being a smart money trap. Why is that? Because they didn't understand control. They didn't understand the narrative of this inducement zone, the smart money trap we had on the left over here based on this false reaction, and then we start to see the level of control based on that mitigation, and then this over here, this efficiency of the pullback. Sellers take control and take out all of those smart money trader buyers. Once we have established that control and we jump down to the M5 time frame, this is where things get important for us to understand and the market structure complexities, because here we see not only are the sellers clearly in control from market structure, we see all of the smart money traps, all of the inducements, everything that's going on. This is a meaningful bearish push established, very easy to see. Now, when we start to see this complex pullback where we have a push up, this area fails to make a lower low, goes on to make a higher high, we've now established a complex pullback internal bullish trend. So what do we now expect? Price could come to this demand area over here, and from this area we could continue higher to potentially come to this supply zone and then go on to make a new lower low after that. So that could be a market structure cycle, but that is also not enough because price came close to the supply area. What if this is an inducement? We need to understand truly who's in control. So this is one idea, but it could also just go from here. It could also just make a new lower low and disregard that area and actually make that demand area fail. So we need to understand true control for us to understand which way we should be trading beyond just simple market structure. So on the M5 time frame now, we can get a roadmap of the day so far, and we can review it and say price has not only come and swept this previous level, it's approaching the supply zone over here, the extreme. So we need to know, is price going to now continue higher in a bullish way as we just mentioned to go towards this extreme, or is this inducement over here enough so that price can start to go bearish from here? We have arrived at that inflection point that we mentioned earlier on where we have two outcomes, bullish or bearish. The way to understand it is, do we start to see this demand area over here that's being held continue to be a demand area and price going on to make that new higher high? That is one option, and we could start to buy into this supply zone, or it could just be bearish, sellers are ready and we have a bearish day. So we need to understand the differences, and when that decision needs to be made, lower time frame refinements, inducements and time windows. The Trinity will save us, and we'll see exactly what we need to do. So first of all, we can see it's an inducement, but when we go into the M1, I want to see exactly signs of control. And from that London window, we can start to see not only did we sweep that structure point on the left, we had a local inducement over here too. So this is giving me clarity that not only have we induced a structure point, we've had an inducement of a local zone, and this has happened in a London window. So we see that we swept Asia high, we swept market structure high, and we had swept a local high. And then what happened right after that? The sellers took control. We had that internal mitigation right there, and then bearish push. Then what happened? Build up, inducement, mitigation, bearish push. So we know that the sellers are in control. Price arrives to this portion of demand right here. People may be interested in this order block zone. Who knows? They may be looking to get into buys, but when we see that this trend line liquidity, this structure point local inducement over here happens and leads to a bearish push, we know that the sellers are once again in control. So that's very obvious. The sellers are in control, but then we start to arrive to that demand area of the complex pullback. Once we are in this demand area, we can see that it's actually a good demand area. Why is that? It's because within the demand area, we found inducements, and that's exactly what we mentioned when we want to clarify and actually validate a demand area is, do we have a build up and an inducement and a push out in the demand area? Here we have both forms of that. We have two inducements in that demand area. We refine it towards both, and then we monitor price action. And during that reaction, we see that buyers took control. They did a small inducement here, a local inducement, and they mitigated exactly that previous inducement, pretty much down to the pip, and actually giving that sniper reaction. So that's encouraging to see. So we see that the buyers take control. The sellers were in control all the way to demand demand, and then the buyers regain control. This is giving a sign that the demand area has invited in buyers. Maybe we should look to buy. So this is how I'm framing myself and say, okay, the buyers are taking control. I should maybe look to buy off this demand area right here. We've seen that bullish break of structure like so. We've also seen this area that was an inducement get taken out. Another bullish break of structure. That means that narrative that I was saying of looking to buy is coming true, and we're arriving to my custom indicator to show me my key window. By the way, if you want access to this, look at the description. You'll find it's my custom indicator showing me I'm arriving to my key window and I'm looking for inducements, and actually everything is lining up to potentially buy. Following with me, this is all making sense. But don't forget inflection points. Don't forget the Trinity to understand true control. So the first thing I notice is that this inducement right here, although it is a bullish breakout, it's interesting to see that this is a smart money trap. Now, why is this a smart money trap? It's because when we see this price action, not only did we have a buildup of liquidity like so, we had all of this liquidity right here, and then price swept that liquidity and led to a low. Then price came into it, started to give bearish price action. So sellers are getting invited in. And then what does price do? Shoot above that area. Now we really need to confirm it with the protocol of understanding smart money traps. Then I see this reaction as I arrive to my key window on the minute. On the minute, what do I see? Price is sweeping the smart money zone, sweeping all of this liquidity, and then giving a bearish reaction. I need to confirm that rejection to confirm it's an inducement and confirm control. So what do I wait for? You guessed it, sellers to take control on the minute of my New York window. And this is where I get exactly what I needed to see. I saw not only an early seller's channel once again, then I saw that final inducement that swept this level, that final inducement within my key window of my New York, where the volatility should kick in, where everything I'm looking for should kick in. Exactly a bearish reaction. Not only do I get a bearish break of structure like this, I get an inducement and a bearish reaction, and I also print some form of liquidity at the lows. So when we follow that picture, we have internal bullish price action leading into that inducement with internal higher highs, higher lows, and higher highs. Once we have that final inducement, price moves bearish like so, makes a lower low, and takes out this previous market structure point that made this high, goes on to now make a lower low and a liquidity target, and plenty of room for price to go lower. Even if price comes to that demand area where I'm actually potentially looking to buy, I can see a lot of space for price to go lower, enough for me to catch the session volatility, enough for me to catch a 1 to 3 risk to reward. So what do we do? As good practice always is, we find our refined IFC of the inducement candle, we find the imbalance of interest, and we find our appropriate lower time frame supply zone. Now we have the Trinity. We have an inducement of a smart money trap. We have a local inducement right here to sense control. And what are we doing? We're trading away from this inducement of the day. This inducement of the day of market structure, Asia high, and a local inducement in our London window. If this is the inducement of the day and the first domino, the rest of the dominoes fall in that way. You trade away from the inducement of the day. And we can see inducement of the day over here, secondary inducement over here. Price comes towards New York, does a New York trap, and then in the key window does another inducement. So you trade away from those dominoes, you trade away from the inducement of the day. And what do we see in that Trinity? We saw our key time window, we saw lower time frame confirmations with this bearish break of structure, and we saw another inducement. So this is the Trinity. Everything is aligning. This is a great setup. So this is something we should look to take. And how do we do it? We put our entry right here. We put our stop loss right here. You can see on screen my exact entry and how that played out. And then we target at least towards this demand area, but potentially even making a lower low. And when I analyze it, where is my 1 to 3 risk to reward? My first take profit that is fixed for data. I always take profit at 1 to 3. I align it around here. And now on that 1 to 3 risk to reward, I take my first partial and the rest at 1 to 10. And we leave a runner. So when I'm seeing all of this happening, I'm like, okay, price can go towards that demand area and then flip on me. That's fine, because at least I'll get my partial, and of course I'll be break even by then. And I have the Trinity. I have found the inducement of the day. I've found the inducement of the session. I found lower time frame confirmations. I've got everything I need to get a session trade. So I can catch my 1 to 3, maybe even my 1 to 10, and not be hindered by that inflection point. And more importantly, I'm selling when I see bullish market structure. Notice how that's important, because market structure is a guide, but inducements don't lie. So once I lock that in, I see price comes into the area that I needed to. Price consolidates, gives that strong reaction, and then break even as soon as we see a market structure shift. Take profit over here at the 1 to 3, and then a news event being the catalyst, giving me exactly what I needed to see. That news event at 3 p.m. UK time gave that small inducement. News is a catalyst for price. And then we see that the sellers took control. We found an inducement of the session, a minor inducement, and continue to push lower. Everything we needed, perfectly done. Price comes to that demand area, hovers around, and then eventually takes it out. We see that there's no buyer's control even as we arrive to these demand areas. This next demand area over here, the extreme, a form of decisional that led to a push out, taking Asia low liquidity. I wanted to see if price is going to react off here, because that was the only remaining demand left, just to see if price is going to go towards my final take profit level. And then I started to see, okay, buyers started to take control, and my position, the rest of it went towards break even. So I didn't get my 1 to 10, but I secured a 1 to 3 risk reward. I risked $2,000 on this trade. So $1,000 was taken as a partial. The remaining $1,000 hit break even because I have 2 take profit areas. On the first one, I locked in a 1 to 3, 50% volume. So therefore a 1.5 R. So a couple $1,000, just under $4,000 there. And then the remaining of the position break even, but that's okay. This is a typical day of my trading. And then we start to see that we did expect buyers to take control, but they took control not in the demand area that I was anticipating. That is this area over here. It actually induced it. And why? Because it's Asia low. So we swept not only the demand area low, we swept Asia low. And then with that inducement, the buyers took control and then continued to push higher and higher. So the market structure narrative played out, but it only happened when? It only happened after the inducement. We allowed ourselves to take a high probability trade, lock in a good session reaction, lock in some profit, did it live on stream with the members, as I do many times. If you want to see live trading with me, if you want to join me and my coaches and my team, and we live trade every single day, every London session, every New York session. If you don't think that's going to be powerful for your trading, don't click the link, don't apply. But anyway, if you want to be part of that, at least come and apply and see if you get invited onto our live trading community, or at least catch the live trading recording so you can actually study it and see it more in depth than actually this video. By the way, you'll also notice that I was trading EU, and I also gave this as a signal, gave this as an exact entry for the members also. And when you see that, it's a very similar narrative. They actually go hand in hand. When I see prices arrive to that supply area, certain mechanics I need to pay attention to. What is it? Inducement, time, lower time frame confirmation. That trinity once again. And put simply, we saw a build up of liquidity here, a smart money zone over here that led to a lower low after a sweep. What happens? In my key window, that gray box that we speak about, what happened over here? We saw a sweep not only of the smart money trap over here, but also this order flow that I was presenting. So we have smart money trap sweep in the time window. So you got inducement and time. What do we need last? Lower time frame confirmation. And what do we see over here? If we focus on the details, we can see that last confirmation that we need. And you can see it in the dots where we have bullish push outs like so. Then we have fails to make a lower low, fails to make a higher high, internal structure, comes here and leaves exact equal lows over here. And then exactly this imbalance closure right here was that entry. And it was a tap and go into profit. 1 to 3 taken over here. Once again, a very nice trade. Called it on the stream. The members took it. Many of the traders in the community took it. I took it. This is exactly how I made just under $10,000 with conservative risk, utilizing that trinity on a day where market structure was confusing. This is how I navigate the markets in real life. Watch the live stream, watch the recordings. And the key to all of this is not just jumping in every time you see the trinity. It's jumping in when trades make sense. And when do they make sense? Well, if you remember, as always, a restricted trader is a profitable trader.